Good evening, everybody. This is Fabrizio Alessandro speaking for Trading Engineering. Today is the first webinar dedicated to getting deeper in the knowledge of one-click effects, the trading tool offered by Vantage Broker in collaboration with Trading Engineering. I see that you're coming in. Good evening, everybody. So, one-click effects, for those who do not know yet what it is a MetaTrader software, a trading tool designed to make your trading simple. I'm going to go through what the product is, what the software does for those who weren't able to join us for the presentation webinar. In the meantime, I apologize for my voice, but I'm coming out of a cold. But before we move forward, I have to read the risk disclosure. Any material, I'm not going to read it. Any material and/or content provided herein is intended for educational purposes only and does not constitute investment advice on how clients should trade, as it does not take into consideration your personal objectives, financial circumstances, or needs. Please seek independent advice before making any trading decisions. Reliance on such material is solely at your own risk, and the company, Vantage Global Limited, cannot be held responsible for any losses resulting directly or indirectly from such reliance. Past performance is not an indication of future results. So let's go straight to the platform. And here we have one-click effects, which, as I was starting to mention, is a set of professional indicators for MetaTrader 4 and 5, designed by traders to make online trading simple and accessible to everyone. We like to think that it's the ideal tool for those who are just starting to trade and for those who want a support to better understand how the market moves and where to take a position. We have two templates which make a profile. As you can see, the first on the left contains a multifunction panel. We call it Square Dashboard, which is both a percentage analysis instrument. We're looking at the S&P 500 right now, and as you can see, it's up 3.18% on a monthly basis, 3.32 on a weekly basis, and on a daily basis, we retraced from the highs, and we are just we're barely in positive territory right now. It's 0.42%. So this is a daily grid. So as you can see, we reached the 2% mark, the 2% pivot, and then we got all the way back to the initial resistance for the day. So I went ahead of myself. So here on the right, you have 3 different technical analysis studies that combined with the information provided by Square Dashboard, the percentage study, and also the navigation system. This is what it makes it a multifunction panel. Allow us to easily set up the trades. So let's see for just a minute the S&P 500, because we're a bit late, but right now we might have a long setup. Let me explain why. So the Square Dashboard is the instrument that allows us to follow the market, see what the currency baskets are doing, what the different asset classes are doing as a whole, and also, of course, the performance of the single financial instruments, currency pairs, indices, commodities, cryptocurrency, and the like. Once we determine the trend, what's happening in the market at a specific moment, we can then select the instrument, the proper instrument to trade, and then go to the technical study in order to set up the entry level, the stop loss, and the take profit. So right now, I was the S&P 500 caught my eye for a simple reason. This is a an operational grid that allow us to look at the market a certain way, depending on the time horizon of our operations. So this has been designed to serve the needs of different types of traders. We can do intraday trading, we can do a brief multi-day trading within the week, or we can go for the really long multi-day trades. And based on our intention is based on the type of trade that we're looking for, we select the proper grid. So right now I'm looking up to the H1 time frame to add the intraday grid, the daily grid, which is traced on the chart starting from the previous daily close, and it's updated every day. And as you can see, the levels go by, the resistance and support levels go by increments of 0.25%. And as you can see, I should have click buy, because I'm going to describe what's happening here, what happened, and why the instrument caught my eye for a long entry. So how do we reason in terms of market dynamics when we have this grid before us? As you can see, I highlighted the starting range of our daily grid. Okay, so we have a support at minus 0.25%, which is 3,680 in terms of price, and a resistance which is 3,699. Okay, so if we place the cursor on the levels, we can also see the price, which is very convenient, because as soon as the market opens, we know immediately what prices correspond to which percentage variations of the market. And we can assume, looking at the chart, that the institutionals mind these types of numbers, because if we look a little behind, we realize that every swing point, major or minor, kind of basically always happens on these levels or around these levels. Okay, so what would have been the trading approach today? So let me take an instrument so I can draw on the chart to better explain myself. In the meantime, I'm still a little angry that I didn't buy the index. Of course, we can quickly look at the Dow Jones and the Nasdaq to see if they're a little behind. No, they're moving in unison. Basically, it's the same move. So what would the reasoning have been today? Here we have our starting range. Plus 0.25 is our resistance, and minus 0.25 is the support. The market starts off by breaking the resistance. Not only that, but it accelerates towards the following resistance, then pulls back, and this, the 0.25% pivot, which was our resistance, becomes a support. See, the market pulls back and then it extends. So this move here, the pullback, even better than the breakout, would have been a great entry opportunity for a long position. And of course, we would have looked to the left of the chart to set up the best possible exit point. As you can see, this is the gap up opening, today's gap up opening, and here we have a price structure which the market reached during the day. So area 760, 50 would have been our exit points. Of course, we should have compared this area with our daily percentage levels, and we would have discovered that at 3,764, we have the plus 2% mark. And also, the S&P 500 is a market that on average moves of 1.5 to 2.5% per day. Exit point, a perfectly coherent target based on the previous price structure and the average intraday move. So I kind of miss this move because I was more concentrated, more focused on Forex today. It was a really good day. I'm kind of suffering from a natural gas position. I reversed myself. I was short, then I decided it was time to go long, and I'm suffering from that. But in terms of Forex market, and also in terms of the indices, we're looking at pretty predictable markets if we look at them through the lenses of these operational grids. Okay, so for example, today I managed to make money on the short side on the Nasdaq. I shorted intraday resistance, then it went on new highs, and then I shorted it again and exited the market around here. Then it went well beyond, and now it's rebounding. But what's the reason why I was talking about the long entry? So we had a first long entry here at close to the end of the Asian session. Then, of course, we could have tried a short entry a couple of hours ago. And now, as you can see, the market pulled back our first daily reference. And from there, it rebounded. So we have the long entry condition, predictive tri-day here. But now, as you can see, the market pulled back all the way to the first resistance. This could have been anticipated as a rebound point. And as you can see, from the level, the market rebounded of 0.50%, which is a great intraday trade in and of itself. So the grid today would have guided us to at least 3 setups. 2 great setups, the first long one and then the short one. And this is something for those who are those poor souls like me that spend every hour, every waking hour of the day in front of the charts things and open these kinds of position. But of course, this is not for everybody. Many of you probably do something else for a living, so you have no really no time at your disposal to see all the trades that a grid like this presents in a day. And this is the reason why we gave one-click FX a multi-time frame quality concerning the analysis and also the operations. So for example, let's say you're someone that does something that has nothing to do with trading. You've got office hours, and so you cannot be there to intercept these little moves that we have on an intraday basis. So let's look at what could have been done on a weekly basis, starting from the weekly grid of one-click FX. As you can see, the principle is always the same. The operational grid is plotted at the opening on Sunday night for us in Italy. And I don't know where you guys are. If you're European, it's basically the same. And so on Sunday night, we already have our resistances and our supports and the related prices. And so what happened was that the market started to rally, then it pulled back in a harmonic fashion, because if you take a look at the retracement in terms of Fibonacci levels, you realize that the market retraced a 618%, a 61.8%. So, and it also reacted from an accumulation candle. Because as you can see, this red candle here is a candle that is followed by a huge rally. So this candle um, is red, but is a candle that has been bought. And the reason why that is, we can say that, is that we know that institutionals cannot place their entire orders at one time. So they need to scale the entry. So it's inside these last red candle or last green candles where the institutional start to play by bit their big orders that can be executed all at one time. So this red candle was actually bought, and usually its opening is an important reference point, or even better, the distance between its opening and the mid part of its real body. So we have a price action, potential support, an harmonic retracement, 618%. Okay, or I should say 61.8. And all this happens just below our new long entry level, 0.50%. As you can see, right at the start of the week, the market breaks out, then it pulls back, and we have what in technical analysis we call a change of polarity of the weekly resistance, which in terms of price was 3,600, okay, 3,604 to be precise. So here we could have opened a long position for the week, okay, go to work, do our thing, place our stop loss either below the opening, okay, or the previous weekly close, or just below the support level, okay. And we would have had also a price structure here to set our possible long target. So this is the move that we could have easily intercepted just by opening a long position at the beginning of the week as the entry condition presented itself. Okay, so breakout, pullback, as you can see here, this shadow kind of landed on the resistance and made it a support. Okay, and the market moved higher from there. And also, we had a confirmation coming from the algorithmic analysis of the RSI, which we can, which is set to show the value of the RSI on the reference time frame, but then we can also look on the lower time frames, the higher time frames, to see if there's an actual confluence. And the RSI was above 50, even on the lower, also on the lower time frames when this breakout, the pullback occurred, and then the extension started. So you have the breakout of the resistance, okay? The monthly long. You have the confirmation of the pullback and the change of polarity. And you also have the confirmation of the algorithmic analysis. So this was an easy long, all right? And then on previous price structure, at the on the last level that we usually monitor with this grid on a weekly basis, which is the 5% mark, we also had a short entry. Okay, so as you can see, we have a guide, an easy guide to follow to structure our trades. And also, when we have a guide, it's important that I mention that when we have a guide, we only act when the conditions that I presented to you actually present themselves, because our biggest enemy as traders is the idea that we should have a position, that we should open a trade because the market is open, we're there, and so we should do something. It's not us that go for the trades, that go for the setups. It's the setups that come to us. We have to wait for them. So having a clear picture of what is a long entry according to the system, what is a short entry, what are the confirmations that I look for, something at random, but only when the correct inputs are there for us to observe, the right confirmation is there, and if we proceed as such. So if we only act on the market, if we only do something when we actually have reason to, this means that our performances will naturally increase. This does not mean that if we wait for the right conditions, we're going to win every time. We're going to make money every time. Okay. The setups can be negated by the following price action. But this means that over the long term, over the week, over the month, over the trimester, over the entire year, if we try to do only sensible things that we have anticipated to do, that we have observed in terms of their success rate, we're probably going to be successful traders. And I can tell you this from my own experience. I have been trading as trading has been my main activity, my main source of income for the past 5-6 years. Okay. And when I started to really become a trader, was exactly when I started thinking along these lines. I need to have my checklist, my operational checklist. I need to have a system. I only have to act, trade, do something when my system tells me that I'm allowed to, that I should. Because when my system says there's a signal, I have to do it. I have to take it because that's my job. So if my system tells me it's time to act, I have to do it. I had many problems, especially in the beginning, because like everybody else, I used to do things, without following a certain system, a certain set of, indicators one day, another set the other day. So all we need is a clear idea, a clear set of conditions that are going to justify our entry. And over time, this is going to make us into traders. Okay, so one-click effects does precisely that. And this first combination, because we have two more, as you probably know, if you already have the tool, this is actually the best one. Okay, and probably even the easier to use. It's the best and the easier to use. Okay, so let me go back to the S&P 500 because it kind of went back. So this would have been a clear scalping setup from our potential entry point to the previous swing point. And as you can see, placing a target here, we would already be out with a profit, with a realized profit. Guys, do you have any questions so far? Am I making myself clear? Any comment? Something? Let me check if the chat is active. Okay. Everybody can chat with everybody. Please, if you have any question, any doubt, please write it down. We can talk about it together. And in the meantime, I would like to have a look at the market as a whole and see if there is something that we can actually catch while we here together. Now, let's have a look at the Forex market, for example. Today, the strongest currency is the New Zealand dollar. If we look at the square dashboard here, we can clearly see it. Starting from Australian dollar, New Zealand dollar, you see here we have a short-term trend, minus 3% on a monthly basis. Okay, and the daily price action is in line with the main monthly trend. New Zealand dollar, Canadian dollar, percentage confluence up to the monthly level. So all the percentages on the 3 time frames are aligned: New Zealand dollar, Swiss franc, yen, New Zealand dollar, US dollar, and euro, New Zealand dollar. So as you can see, everything on the New Zealand dollar is lined up on the upside. There's a question. What are the names of the tools? Asks Johan. So starting from the right here, we have Square Dashboard. Okay, so this is the navigation system and the instrument that gives us the percentage analysis. And here we have, we can customize our checklist. As you can see here, we have the 50 slots. We can type in the names of the instruments that we want to follow. All we have to do is to use exactly the same letters, use the same symbols used by the broker. So we have to make a difference between uppercase and lowercase letters. If there are suffixes, points, different, different things added to the usual symbol, we have to add them. Otherwise, the instrument will not recognize the instruments. And also, all the symbols that we have here have to be visible here inside the market watch. Then on the right side, we have basically 3 indicators. The one that plots the operational grids, the daily, the weekly on H4, and the monthly on the daily time frame, is the percent pivot, which is also, as you can see, we have 3 because we have one that shows up to H1 and give you the 0.25% increments starting from the previous daily close. Then we have the weekly one, 0.5% increments from the previous weekly close, and then we have the monthly one, which we see on the daily time frame, which, as you can see, gives you 1% increments. Okay, and it's only visible on the daily time frame. Of course, you can customize these values based on your needs and based on the instruments. Because, for example, on Ethereum, Bitcoin, perhaps the 2.5%, for sure, the 2.5% daily limit. As you can see on the daily grid, we go up to 2.5% and down to minus 2.5%. Of course, it's not enough. Usually for Bitcoin, as you can see, we go much below, we go much higher. It depends on the volatility of the instrument. So you can actually customize that by going to the percent pivot. You choose the one you want. As you can see, we have a visualization setup, which is different on every percent pivot. And here you have 10 levels, and you can adjust them if you think it's necessary to trade a specific instrument. You can also make a new template out of it and use it for Bitcoin exclusively if you are a cryptocurrencies trader, for example. And this is the percent pivot. Then you have the Algo MTF, which presents the algorithmic analysis of the oscillator that you choose among a series of them on every time frame. Okay, it presents it in form of a histogram. So you have either a bullish or a bearish reading in order to make it simple. If you go to the input section, you can see here that you can choose between Vortex, ATR, which I don't advise. I mean, it's probably the one I let go. The MACD, momentum, RSI, and stochastic oscillator. And you can also set up the values, the relevant thresholds for every indicator. There's a particularly interesting combination of RSI and Vortex, When they are aligned on a bullish or bearish reading, you have an easy continuation or an easy continuation of the move. I'm going to show you. And also here you can set up the reference time frame. We advise that you use the current one because it makes no sense to, it's less useful to look at a single RSI number. Say, for example, the daily RSI while you're looking at a 30 minutes chart. Okay, so we set it on current. So every time you move from one time frame to the other, there's a different reading. So, for example, in terms of the strength of the market relayed by the RSI reading, let's take a long-term grid for US dollar for dollar yen. As you can see, well, this is the Bank of Japan intervention. Then the market came back up as quick as it went down, and then we had a consolidation phase, which turned out to be an accumulation phase, which is also highlighted by the fact that during this week, the market didn't go back below the resistance, the 0.50%, and the following week, it didn't go below the weekly support. I mean, there was a spike below, but the market came back up. And as soon as it came back above the minus 0.5% support, it was actually a break-in pattern, so a false breakout. The RSI analysis on H4 became bullish once again. It was a brief interaction here, okay, and then it went back to bullish. And from there, so after the market went back above the support, the market just went up 530 pips, okay? For 2 weeks straight, the market just went up. And the algorithmic analysis of the RSI never changed. So suppose you took a long position around here because the market couldn't break below the support, couldn't break below the base of the accumulation phase. So what would you be doing right now? You'd be looking at your open long position with a monster gain, okay? Because the algorithmic analysis of the RSI, this is the algo MPF indicator, not only tells you with the algorithmic, with the percentage analysis when the trend comes back into play, but also it tells you when the trend starts to break down. And so far on an H4 time frame, the bullish trend is perfectly intact. See, from here, from October 5, the RSI has been always in bullish territory. So why would you close your long position until the algorithmic analysis tells you otherwise? And if we go on a lower time frame, H1, we can see that it's still bullish. M30 still bullish, perhaps no, even on M15. On M5, we have no clear sign that this is about to break down. So in terms of long-term trading, of course, it's not long-term trading as an institutional investor would intend it, of course, but for a trader to be 3 weeks on the same instrument with an open position is long-term, at least in my mind. So in terms of long-term trading, the algorithmic analysis and the RSI is very good for this. Can also tell us when to exit our position and when to maintain it if we don't have information that in the beginning, I was talking about those guys that cannot really stay there every day hours a day to look at the market. Let's take the monthly view on dollar yen. As you can see here, after the pullback, okay, the base of the consolidation phase is also the monthly support, the -1. So not only you have the false breakout of the weekly support, but also you have the monthly support that holds. So around this area, it was time to buy. The RSI was in line, was coherent with a long view, with a continuation view, and the market just continued up to the 3% mark. Now, should we see, so it was a really easy trade, and a trade that the system was showing. Okay, so now after the market, hypothetical entry point here, made 500 pips, it kind of slows down in terms of price action on a potential resistance. We can take some profit, or we can close the position. But if we set up the rule that we don't exit the position because it's a long-term one until a certain time frame's RSI tells us so, well, we still would be with our long position, and we would be waiting for the RSI to tell us it's time to move out of this position, and it's still not telling us. If we look at it on a long-term basis, which means looking at it on a, and also, I don't know if you, and then, just to close, because I tend to talk a lot, but I hope it's useful. I think it's useful. Then we have a third indicator. This is a simple time frame changer that also tells us what the price is doing on every time frame with the use of different colors. So we have different types of green, and different types of red. Some of them are not really red, what we call them red. So let me show you what every color tells you about the price on that specific time frame. So the name is template changer, and no, sorry, time frame changer, which would be this one. Tells you that you are above the previous high. So on dollar yen, we are above the monthly, the weekly, and the daily high, the previous monthly, weekly, and daily highs. Orange red tells you that you are below the previous low. Here we have M30, and as you can see, we are below, in terms of price, below the previous M30 low. So we are below the lows. Then you have the light colors, pale green and peach puff, which tell you that the candle is simply green, so the price is above the open, and red, price below the open. And then we have red and green, which tell you when you're looking at a break-in pattern, so a false breakout of the previous high, which is highlighted with the red color, because it's a potential, you have a potential reversal to the downside, and the green color tells you about the breakout, the false breakout of the previous low. So let's see the false breakout on H4 here on dollar yen. It's this one. As you can see, the market broke above the previous H4 high, and then price came back below. So this could mean the market is about to retrace a bit. Okay, let's look for a here you have a false break. Now this is not really good to explain. Okay, let's see, let's try to find something better. Okay, H4, false breakout of the previous low. As you can see on New Zealand dollar, US dollar, we broke below the previous H4 low, price came back above, and from there it moved 24 pips after it came back. So this is a potentially bullish condition. the false breakout of the previous high is a potentially bearish condition. Of course, when a break-in happens, if on the lower time frames, meaning M1, basically M1, because the RSI is kind of a lagging indicator. So we really have to go low in order to see a sign of the potential follow through of the break-in on a higher time frame. As you can see here, it's kind of what we have. So we have the break-in on an H4 on the H4 time frame, and if we move as low as the 1 minute time frame, we can see that after the return above the previous low, we already had a bullish RSI reading. And so the market, you see, made those 24 pips. So this could have been a confirmation of the break-in. But here we go back to the, the realm of the poor guy that stays in front of the chart like me every day. To see something like this, you really have to stalk the instrument. All right. It's quite simpler to go for the intraday setups. You can set them up, placing some alerts, for example. So let's say you're at work, you have your laptop on the side, you place an alert here, you place an alert here. These are your reference levels, your relevant prices for the day. If the market arrives there, then you start looking, and then when you have your entry condition here, for example, the pullback, you simply open the position, you place your stop loss, your take profit. Let's not open 50 lots, 1. So you place your order here. Then, of course, being a limit order, you need to 0.5620. Stop loss. Okay, and then you can move it. And of course, also you place your take profit and you go about your business. So this is also the very interesting thing of having a grid to rely on. The point is that it's the system that tells you what are the relevant prices, the relevant levels, and until the market is not there, it's kind of pointless to look at charts. Okay, so you select the instruments that you would like to trade based on the percentage analysis. So are you looking for a directional signal, a directional entry? You're a trend following trader. So you simply identify those instruments that are moving in trend. And on those instruments, you put alerts. You select your time horizon, of course, the day, the week, or the month. And on those instruments that present a clear directionality, a clear trend, you simply put the alerts on the relevant levels. And up until the MetaTrader sounds, you have no business being in front of the screen. You just can leave it there, go about your business, and then when the MetaTrader sounds or sends you an email, I think you can also set it up to do that. You go on the chart, and if it's you think it's the case, you start setting up your trade. And also, you can employ this technique of placing alerts also to manage a position that you have opened. I don't remember where I placed those. Okay, it was New Zealand dollar. US dollar. So suppose you set up this trade. Okay, you go long here, and then you have a target price, let's say at 1.25%. Okay, for the day. You can leave it there, or you can also do something else. So for example, it's not the best example. This will not convince you to do that, and I'm going to use it on purpose because I don't have to make you think that these things are so simple that I mean, you do this, and that, you maximize the gain for your operation. But you can also use the alarms to see what the market is doing as it reaches the various checkpoints of the operation. So you have a target here, okay? But suppose the market does exactly this. So it misses the level for 2 pips and then it goes back down without doing this after, okay? Is there a way that I can be sure that I will cash in something if my target is not reached? Well, you can use the grid to manage your position. Specifically, you can use it to implement a manual trailing stop strategy. So if you enter here and you have your stop loss here or here, okay, let's say you have it here. So let's do it cleanly. So let's say you enter here, your stop loss is here. It means that here you have 1-to-1 risk reward. The market goes up here. You already made one with a okay, you already made your 1-to-1 risk reward. So place an alert here. You may be happy with this, okay? You might close it here, or put an alert on 1-to-2. On 1-to-2, well, my operation is really going well. So it goes up to here. I can remove my risk. So I can move the stop loss to break even, for example. Okay, so it reaches target 2, my 1-to-2 risk reward, and I go to break even. So I eliminate the risk. It goes to target 3. I might decide, okay, I put an alert here to know when it happens. It goes to target 3. Okay, well, sorry, here to know when it happened. I might decide to move from break even to stop profit here. So if the market doesn't catch my exit point and goes back to my stop profit, at least I have my 1-to-2 realized. Okay, so this is a way to make sure that on every operation that starts going your way, you're going to bring something home, something to the bank, so to speak. Okay, this requires some attention. The alerts can greatly help us in that. So we don't have to look at the chart every minute of the day, of course. And it might be something to try out. And these grids are perfect. And also, when I was presenting this technique, you may have noticed that the levels are equidistant from each other. So in terms of understanding what's your risk profile for every trade, makes it really easy, because as I told you, you enter here, you place your target here and your stop loss here, you have a 1-to-1. The target goes here, you have a 1-to-2, 3, 4, 5. So it's very simple to have a clear idea of what's the profile of your operation, and you can also use the levels when they are reached to decide what you do in terms of management with your position. But this is something that can be evaluated later on, because of course, if you are a beginner, it's much simpler to place your position, find a level that can be an interesting exit point, because you have a previous price structure, because you know just simply by observing the market that a symbol moves a certain amount per day. You're going to see it clearly in terms of percentages, and then you can also evaluate it in terms, or remember it in terms of pips, for example, from low to high. So New Zealand dollar, US dollar, for example, is a currency pair that on a daily basis moves around from low to high, high to low, 75 pips. So this is the intraday low. This is the intraday high. It's 115 on a resistance. This is what justifies going short, because it went 25, 40 pips above its usual daily range. So when you are 40 pips above the usual range on a resistance or on a support, well, you're justified to open a contrarian position. Okay, so as you can see, on a daily, on a weekly, and on a monthly basis, the simple system allows you to trade the market both in a directional and counter trend fashion, and it gives you the references you need to establish whether or not the directional entry is appropriate and the contrarian entry also is appropriate. Oh, Joanne, it's my pleasure. I'm glad that what we talked about can be useful, and today we have dedicated the webinar to explaining some things, and of course we're gonna go back to these subjects, because we're gonna do for sure one webinar per month of this sort. But should our collaboration with Vantage and with you guys take traction, I don't know, I think I didn't say it the proper way, but should things start to pick up, we're gonna for sure see if there's the possibility to make more frequent webinars, and I'll be glad to do some live operations in order to even better understand how to use these tools. I wanted to go long on the S&P and look at it. There was also some connection problem because if you remember, it was here, and then when I started talking, it kind of it kind of started back from up here. It's for sure my connection, but as you can see, the long entry was there. So let's quickly see if there's something that might be of interest on a daily basis. But of course, we don't have to do things for the sake of doing them. And this is what I was talking about the entire webinar. So I wouldn't close it for sure, just by opening a position for the sake of showing you that there's something to do right now. But let's have a look to see if there's something. For example, euro, dollar, Canadian dollar. It's too bad that is already started. Oh, no, this could be interesting in a bit. Why? The move was from minus 25% to almost 0.75%. From low to high, it's 120 pips. Euro, dollar, Canadian dollar. And this currency pair usually does 110 pips per day. Okay, as you can see, the 75 more or less mark. Actually, this is a 1% move. It's in the cards on euro, Canadian dollar. So should the market arrive here, we may have an interesting short entry, sorry, for this type of setup from 0.75 to 0.50. It would be a 33 pips setup. But now we have to verify if this, besides being an interesting level, above the average range of the currency pair, is also interesting in terms of previous price action, price structures. As you can see, this is interesting. This area just above here is interesting because we just broke a major resistance. And unless the market is going to fool us all the way, these breakouts are usually followed by a small correction before the market eventually goes higher. So we might have something here on Euro Canadian dollar if it reaches 0.75%, which is around level 136. So this could be something. And in this case, I wouldn't place a limit order, a sell limit to start. I would simply place an alert in correspondence with the level. So if the price goes there, the MT4 sounds the alert, and then I see what I have. If the price reaches here, then I'm gonna look what's happening on M1. And if I see that on M1, you got already, some small signals that the market is decelerating. Okay. In fact, here it corrected 20 pips. If it goes to new highs and I start seeing something like this, then, well, I might open a short position. So this is something that I would look at in the next hour. I will on my PC. All right, nothing here. Makes you want to buy yen. Every chart, euro yen, dollar yen, I'm in a small drawdown on US dollar yen. I started to sell it at the end of last week, and it's still going. Let's wait for the next Bank of Japan intervention. I mean, they started talking about it, so it should be we might be able to see it in the next few days. Today it almost looked like they were going at it. As you can see, 115 pips in 2 seconds. So these are the the traces, the footsteps of the footprints, sorry, of the central bank potentially. The last time they intervened, the market did this. No, sorry, where was it? He did this, 500 pips in a day, and in a week from top to bottom, 570, sorry. So I am waiting for this move, and when it starts happening, if I'm there, I'm gonna sell even more. That's up to me, because it's these moves are unannounced. You don't know when it's gonna happen. In order to realize that it's happening, you usually have to be awake at night. So it's not very simple, but I already have a position that if that happens, it's going to pay me. No, nothing here. Unfortunately, I did, various intraday trades. I'd show you, but I have them on another platform. You see, and I can't show you. I can't show you because it's a different platform. I'm gonna show you another time. And so I'm not seeing anything particularly interesting right now. I was looking for a new long entry on silver, and perhaps I lost it. Well, no, it might be there, still there. As you can see now, we are testing the intraday support. It's holding minus 25%. Let's see on a weekly basis what's going on. Okay, but there's I wouldn't buy it here. It's too busy here, the price action. Let's see oil. I have a long position on oil open right now. Let's see how it's doing. Only 15 euro of gain. I'm aiming at 100. Let's see what happens. But as you can see here, for example, we had an intraday excess from high to low, 420 points. Sorry. See, yes, 420 compared to an average of 410. So we were at the limit. I even started to buy it a little earlier, kind of here. So I have now two positions, one here, one around here. And another, and a buy stop kind of around here in order to complete this move. And this is my target. Now it's a bit late probably to open a position, but I would expect to see 83.30, 0.50 in the next few hours or maybe tomorrow. Natural gas, it's really, this could be an intraday entry. It's very dangerous right now, but this could be a setup. Let's justify it. And let's see if, as you can see, for natural gas as well, the risk is that the levels are not going to be sufficient. It's minus 16% on a monthly basis. So I mean, we have 10 levels up to 10%. So if you have to trade, if you're a natural gas trader or a Bitcoin trader, you might want to adjust some of these grids specifically for them. Right now, the only thing I would buy so far is this, but I mean, the European Union is close to an agreement on a scheme of shared. It's really not something that you would advise your friend to do, but so far this is the best market that I would buy right now. I already bought it, so I'm not gonna add to it, but this could be interesting. Sorry. And sorry. And the indices right now are going back to sliding, so there's really nothing to do here. Okay. Are there any other questions? Because for today's webinar, I think we did enough, but I'd like to hear some questions if there are any. In the meantime, some MetaTrader is sounding. Let's see. What's up? New Zealand dollar, US dollar is sounding for some reason. Let's check it out. Yeah, maybe a false alarm. It shouldn't have. Oh, maybe it was here. I don't know. Maybe okay. It was the alarm of the example of the trailing stop strategy. Okay, so I see there are no questions. If you can still ask them if you want. In order to recapitulate, so we have today we saw what we can do with the first setup of one-click effects available with one-click effects. So we have a percentage analysis, a system that allows us to identify the trend of specific financial instruments and of asset classes, whether they be currency baskets or proper asset classes like equity, commodities, metals, etc. Okay, cryptocurrencies. We see that clearly. We can see the trend of every single instrument and of the various asset classes, and this also gives us the opportunity to see whether or not the typical correlations are in play. Once we determine what type of trade we want to do, let's say trend following, we identify the instruments in trend. Then we select our time horizon of reference, so the daily, the weekly, or the monthly grid, and then we place our alerts on the significant levels, which are the extremes, the limits of the starting ranges, the daily, the weekly, and the monthly. And then when the entry setup presents itself, only then we open our trade and immediately place our stop loss and our take profit. And then from there, we can also decide whether or not we want to manage the position as it goes. Very simple. We're looking at identifying the trend. Square Dashboard does it for us. And then simply find the breakout, or even better, the confirmation, the change of polarity of the resistance, selling the breakout or the change of polarity of the support. And then all we have to do is to identify the higher probability target based on our percentage levels and the previous price structures. We also saw, okay, there's a question from Jan, probably. And then we also have the counter trend option. When we reach a resistance, we reach a support, we are in a above or below the usual, average range for the day, the week, and the month. How to get these instruments? Let me say that for starters, that you can have these instruments for free. Let me see if I find the slide. You should have to contact your account manager at Vantage and simply request a 15 days trial. If you like the instruments, you can then maintain them, simply depositing $500. So there's no fee, there's no payment for these instruments. All the broker asks is a deposit after a 15 days trial. And if you like them, as long as you have this minimum deposit, you can have them for as long as you want. Okay. The tools come with tutorials for the installation, on how to use them, and you can find them in the other profile of the software, which is the license. If you ask your account manager at Vantage to give you a license, she will give you a code. You will insert it here. You will activate the software after the installation, and then here you have the tutorial that explains how to use the various systems, which are the percent pivot here, and we have this one. Perhaps we can talk about it in November in more depth. Supports and resistances, and cyclical moving averages. These are special average moving averages that we have identified for you. We have the starting from the 1 minute time frame. Let me say that very quickly. We have the 30 minutes moving average, the hourly moving average, the 4-hour moving average, the daily moving average, the weekly, the monthly, the quarterly, the semi-annual, and the annual. The point is that usually, unless there's a run at the Bank of Japan, like in 2022 on every yen currency pair, the market usually goes back to the average, the moving average of the period, at least once during the period. So let's take the pound US dollar. This is the weekly moving average that we see on H1. At least once a week, the market is going to go back to its weekly moving average. So if it's more than a week that the market doesn't touch its weekly moving average, it's likely that we're going to have to start to look for an interesting resistance or an interesting support, because the pullback of the average might be around the corner. And of course, as supports and resistances, we can use these ones, which are our previous daily, weekly, and monthly highs and lows, or we can look at the percentage levels, which are far better reference points to identify resistance and support, as you can clearly see from every chart that I have opened today. And then we also have something even simpler. This is a price action study, and it gives you a possibility to look at the higher time frame candles over the lower time frames candles. So for example, here on H4, you're looking at the weekly candles superimposed on the daily time frame. You see the monthly candles. On the intraday time frames, you see the daily candle, the one that is forming in real time, and all the previous ones, and you can clearly see the real bodies, the highs, the lows, the opening level, the closing levels. These are all interesting reference points in order to understand how the market is moving. And it's also an instrument to learn if someone is just started studying in the price action. It's an instrument that it's very useful to understand how the higher time frame candlesticks come to be. You know, it teaches you about the noise, what technical analysts call noise. So for example, 2 days ago, we had a short day on pound US dollar, but look at what happened here. Okay, so 100 pips up, 100 pips down, then up again, then down again. But in the end, this was a clear-cut bearish candlestick with a real body of 133 pips. So it's a bearish day, regardless of what happens here, which is all noise, speculation, automatic systems, probably high frequency trading and all that. Okay, but in the end, the day closed as it started. So this is a very useful tool for those who are studying price action. By far, the best system is this one, and you can add the indicator that traces the averages. Okay, because this gives you an idea of where the market might end up, end up going based on that principle. So that every week, on average, the market goes back to the weekly moving average. Every month, on average, it goes back at least one time to the monthly moving average. And even here, we can start thinking in terms of excesses. So it's more than a day that it doesn't go back to the daily moving average. It's more than a week that it doesn't go back to the weekly, and so on and so forth. Okay, and combining this information with the supports, the static supports and resistances provided by the percentage levels, we can really do great things. I mean, in my personal trading system, the graphic references are exactly the percentage levels. And I also have the moving average. I also look at RSI and Vortex in this form. And of course, to understand the market, what can you do if not look at the percentage variations of the higher time frames? Okay, and having them presented like this, the machine tells you what's going long, what's going short, what is not presenting a clear trend or is simply retracing inside of a trend, like the pound, for example. Makes it easy to select the best instruments to trade. And then I showed you how easy it is to actually set up the trades, starting from this operational grids. Okay, so all you have to do is to contact Vantage. Perhaps you already have an account manager, and if you want the instruments, just ask for them. They're gonna provide you an activation code, a file to download the installer, and it's actually a zip file where you find some folders you have to copy in your data folder. And after 15 days, if you want the instruments, just make a small deposit and they're going to be yours. I want to thank you all for being here with me tonight. I can already announce that we'll probably do another webinar like this one on November 15th. But of course, Vantage is going to inform you via mail, through their social media. So you're going to be informed beforehand. I hope this was useful. And I hope you, if you don't already have these instruments, I hope you're gonna try them out, because they can really make things easier. And I mean, I tell you for my personal experience, and it's with these tools, okay, that I actually became a trader, because I work for this group, which is a software house made by traders 7 years ago. So I grew up with these tools, and learning to use these instruments actually made me a trader over time. And now I have a system that I believe, based on these percentage levels precisely, that I think I can take with me for years and years to come. And it's going to be a great, the main basis of my income, actually. So I hope these instruments can do for you what they've done for me. And if this is not a reason to try them out, I don't know what is. So if you don't already have them, give it a chance, and perhaps let me know next month when we're going to have the next webinar. Thank you all. Good trading, and I hope to see you soon. Goodbye.